Hello, blockchain buyers. So, I just got finished watching the SEC pick for Gary Gensler, and I listened to my favorite YouTubers talk about Gary Gensler and what he is going to be bringing to blockchain and how he will be the regulatory go-to guy for the lawsuit on Ripple and all cryptocurrency following. Everybody that I watched, they did a great job. I wanted to give you the same type of coverage on what happened during that SEC confirmation. Since there's so much information about Gary Gensler, I wanted to talk about somebody else who was a part of that confirmation, and his name is Rohit Chopra, and I'm hoping I pronounced that right. So, who is Rohit Chopra? Rohit Chopra was President Joe Biden's nominee to lead the Consumer Financial Protection Bureau, the CFPB, and is likely to return the agency to its original incarnation, proactively rooting out bad actors and levying hefty fines on violators, regulatory experts say. Chopra's confirmation hearing on Tuesday will be the first of Biden's regulators to face the Senate Banking Committee. Now, without digging too deeply into Chopra, I just wanted to point that out because in addition to Gary Gensler being confirmed, Rohit Chopra was also being confirmed. But I thought it was very important what he said. He brought up faster payments, he brought up leveling the playing field, or at least commented on it. And I thought it was very important, so I wanted to show you Rohit Chopra and his side. So let's get into that.
Appreciate that, Mr. Chopra, and building on that theme, during this pandemic, much like during the crisis in 07-08, the 12 or 13 largest banks have received trillions in emergency cash. It's provided on an overnight basis, and there are no such instantaneous emergency cash facilities for credit unions or regional banks, let alone ordinary people who have had to wait months for stimulus checks. And I would note that many members of Congress who currently oppose sending cash to ordinary people in a pandemic raise no concerns about the massive scale of cash and cheap loans provided to Wall Street banks. Why is it so much easier for major banks to access emergency financial support in a crisis, and how could we level the playing field?
Well, Senator, you're right. Small businesses, households did have a tougher time getting a lifeline of support, and I know that was a struggle. You know, one of the things that our Federal Reserve Chairman has talked about and others is modernizing our payment system so that we can have a more real-time system. We cannot be falling behind other countries. We see that China is in many ways investing in faster payments, in a stable coin. These are things that will help consumers and businesses get money faster to their benefit. And you know, I strongly support the Fed's efforts to modernize that payment system so that everyone can have equal access.
Thank you, Mr. Chopra, and I would note that the Retail Payments Office of the Fed is based at the Atlanta Fed. I want to ask you now about financial technology. We saw this week a report that Walmart has hired 2 former Goldman Sachs executives, and Walmart's investments in fintech signal an interest in expanding the provision of financial services to its massive customer base. On the one hand, more competition could benefit consumers. On the other hand, there are looser regulations for industrial loan companies, which could threaten financial stability, and the entry into the banking sector of a retail giant like Walmart could raise antitrust concerns. What are the implications for consumers and for regulators of these developments in digital banking, of the prospective entry of Walmart into the banking sector, and how can policymakers address them?
So, Senator, while this is not a core issue of the CFPB, it's something I've thought about quite a bit in my current role at the FTC. We have seen how large technology platforms are increasingly entering financial services. Facebook's Libra proposal drew a lot of scrutiny from this committee as well as regulators all over the world with respect to how it might impact privacy, fair competition, and even compliance with our money laundering laws. So I do think we have to make sure we're looking at the issues that are facing our country today, but also these other issues coming down the pike when it comes to market structure. I don't want to see a banking system or financial services system where new market entrants cannot get in, cannot compete, and win the day. Dominant players should not be able to squelch out competition, and that's something we need to always be mindful of.
Thank you, Mr. Chopra. Mr. Chairman, I yield back.
Thank you, Senator Ossoff.
I'm confident every senator here today supports responsible consumer protections and a robust, transparent marketplace of consumer products and services. I'm also certain that every senator present would agree that regulated entities should have the right to know what the rules of the road are before being charged with breaking them. Unfortunately, when the CFP was first established, its leadership quickly established that enforcement, rather than clearly articulated rules for regulated entities, would be the primary mechanism for protecting consumers. The CFPB's frequent use of enforcement and supervisory authority as an extension of rulemaking had a chilling effect on the marketplace as firms began to exit certain business lines rather than risk running afoul of the Bureau's vaguely defined and constantly shifting standards. So my question, sir, is, if confirmed, will you strongly commit to the continued improvement of overall transparency, efficiency, and effectiveness of the CFPB's supervision and enforcement programs?
Yes, and I also will commit that to market participants, what's expected of them. Ultimately, that is what creates a vibrant market, and that is something that the CFPB must do, adhering to all of the procedures Congress has laid out. That I am absolutely committed.
Well, thank you, sir. My last question, understanding that the conservative nature of the time remaining is important, Chairman Brown. There's no doubt that the availability of responsible small dollar credit is essential to millions of Americans and plays a key role in helping consumers weather temporary cash flow imbalances, unexpected expenses, or income shortfalls during really challenging times like the pandemic that we're coming out of. In acknowledgement of that, CFPB, FDIC, FRB, NCUA, as well as the OCC issued a joint policy statement at the outset of the COVID-19 emergency that encouraged financial institutions to offer responsible small dollar loans to both consumers and small businesses. In the years since that statement was released, CFPB and other financial regulators have taken a number of positive actions to facilitate the ability of financial institutions to more effectively meet the small dollar credit needs of their communities and their customers. As director, what actions would you take, both independently and in coordination with other financial regulators, to encourage the availability of and access to a wide variety of credit choices for consumers?
So, Senator, I want to work closely with all of those agencies you've mentioned, and including the National Credit Union Administration, which has its own small dollar rubric. I also want to make sure that it's more than just access to credit. It's also about access to one's money. The faster consumers can control their money, and sometimes they have to wait days and days for it, that makes it harder for them to make ends meet. I referenced to one of your colleagues the importance of us having a modernized payment system. All of these actions will make it easier for consumers to have control of their own destiny and ultimately lead a strong financial life.
With that, the hearing is adjourned. Thank you all.
Thank you so
Gary,
much.
thank you, Rohit. Thank you.
Thank